Hey everyone, welcome to the Your Money Live podcast. We're in episode 252 of the podcast. Wherever you're listening, make sure you like, subscribe, five-star rate, and review this pod. If you're watching on YouTube, do the same thing. We're going to go over a lot of things this week because I think it was a big week. Of course, it's Thanksgiving week, so I'm actually recording this earlier, a day earlier than I normally do. And I might release it a day earlier so that everyone can enjoy their Thanksgiving with their family, turkeys, ham, cheese. What else do you have on there? Forgetting what goes with our the sauces, all the sauces, the turkey sauces, the gravy, mashed potatoes, everything that goes with it. So we're recording this a little bit early today. Let's get into it though. I want to jump right into everything. Starting with OpenAI, they received a $1.5 billion boost from SoftBank. So OpenAI will allow staff to sell 1.5 billion in stock in a new tender offer to expand SoftBank. So SoftBank is this big investment fund company that's actually public, huge amounts of cash that they're just investing in everything and anything. And they're now allowing staff to sell 1.1 billion in stock. So they're giving them liquidity. SoftBank's coming in and taking up that liquidity for evaluation. They're getting 1.5 billion. SoftBank is giving them 1.5 billion for that equity shares. So OpenAI is allowing employees to sell roughly 1.5 billion worth of shares in a new tender offer to SoftBank. The new financing will allow the Japanese tech conglomerate to get even larger slice of OpenAI's startup, and it will allow current and former OpenAI employees to cash out their shares. Employees have until Christmas Eve to decide whether or not to participate. The tender offer, which has not been previously reported, was spurred by SoftBank billionaire and CEO Masayoshi Son, who was persistent in asking for a larger stake in a startup after putting 500 million in OpenAI's last funding round. So they can't get enough of OpenAI. They put in 500 billion and they're like, all right, we want to put another 1.5 billion to own a bigger chunk of OpenAI. And I don't even know what OpenAI's valuation is at this point. I know it's in the many billions. And that's just when you have a lot of equity like SoftBank. Their fund is incredibly huge, one of the biggest funds out there, if not that we're aware of. And they're just looking for ways to deploy their cash into things that they believe in, and they believe in OpenAI, and so they're putting another bit of a chunk of cash here for an equity stake. And OpenAI was valued around 1.157 billion in October. Meanwhile, the company just suspended access to its unreleased video generation tool Soro following a protest of its treatment of creatives. Interesting. So the unit price will be $210. So it's not public, but the unit price will be $210 as if it were public. That's the stock price. And OpenAI again was valued at $157 billion in October, which is a large sum for a company that's still private. And I don't know if they make plans. They're probably not making plans to go public. It's a company that was at one point, remember, the origin of OpenAI was supposed to be a nonprofit, open source, OpenAI, get it? Right? Like, and now they turned it into for profit. And that's one thing that Elon must have said he didn't like, that they've turned it into a for profit. And they're about to make all the insiders going to make a lot of money off of this, of course. So we'll keep our eyes on it. That's actually really, really incredible what's going on over there. Morgan Stanley has failed client vetting. So Morgan Stanley is a wealth management business, failed to adequately screen prospective clients from overseas, a core viewed as a driver of growth, exposing lapses in anti-money laundering procedures. So, of course, every bank has their ASML procedures. They have to make sure that every person they take out as a client is not doing illegal things, is not doing drugs, laundering money, any of those sort of things. So they have to do their own, they have to do anti-money laundering processes to vet anyone that opens an account. That's what you have to do, especially, when we create accounts, you have to get the social, all these different things for people to understand exactly who they are, what they do before you allow them on your platform. And then, so with Morgan Stanley, apparently they failed this vetting process. Documents show that 24%, or about 46,000 of the unit's international clients were labeled high risk for money laundering. Since 2023, the bank has closed thousands of accounts and implemented new technology to vet clients. So they're having issues. There's apparently, I wonder who audited them. It looks like, did they audit themselves? But they of course they were wanting to get these new clients, but they didn't want to fully vet them because of course if they did, they knew what they would find, I'm assuming. But now they've had to retroactively close thousands of accounts and go back to stricter vetting processes to stave off any anti-money laundering or people to open accounts on their platform. And so that's something, of course, that people are aware of, but it's not as in the purview of the regular mass consumer. But that is something that banks have to look out for. The Fed, the Federal Reserve anonymous officials unanimously approved the interest rate cut they made earlier this month, but they signaled caution on further reductions. So the minutes of the November 7th meeting showed they cited less risk of a softening labor market, as well as firmer inflation readings in recent months. So they're saying, hey, there's less risk of a softening labor market. Inflation readings are better and more sound. So we don't have to be so quick to cut rates, or we can do it cautiously. Let's make sure that we see all the data we want to see before we do it. The Fed lowered its key rate by a quarter percentage point, as we know, to 4.5 to 4.75%, following a larger than usual half point reduction in September. Remember, the half point reduction wasn't expected. And then they did a quarter point reduction, as we know. So they're saying that they're going to be cautious. They're going to look and make appropriate cuts as needed. And so this is just their commentary to the actions they're taking. So of course they always come with that commentary after to get people a better understanding of why they make certain moves. So that's something to keep our eyes. And we are going to talk market update here after we do um, our current events, which is a little flip than we normally do. So Zoom has announced a new name and a new focus. The company is now Zoom Communications instead of Zoom Video Communications and wants to be known as an AI first work platform. The change reflects Zoom's move beyond video conferencing, which has made popular during the pandemic when more people worked from home. And there's also been increased competition in that space from Google, Microsoft, LinkedIn, and Slack. Zoom expanded its offerings, launching Zoom Works with the productivity tools, AI-powered features to capitalize on the industry-wide AI boom. So interesting. I saw the stock had moved up a little bit, if it was yesterday or the day before. But this would make sense because they are now trying to rebrand and capitalize off of the AI boom. And so they're saying, oh, we're in AI, we're Zoom communications, we're doing all productivity tools. And so I did see the stock move on that news here as you see it here for the YouTubers. And it's a little bit flattened since then. But I mean, year to date, it's tracking for a little bit less than the market. But again, this is a company that has to reinvent itself in this new world where no longer everyone's sitting at home. It's no longer pandemic times, everybody's sitting at home throwing cash into different stocks that they think will just only go up, which did for a short period of time. But now you have to reinvent yourself. Now you have to understand, are you actually able to make money as a company in this market? Are you actually able to draw increased customers? Which is something that they have to figure out. And it looks like they're trying. And one of the tools that they're doing so to do so is just that rebrand. And we'll see how that works out. I'm not that, I mean, it's a lot of buzzwords, but what does that actually mean? I'm not that into that until I understand what that actually means for the company. So we'll keep an eye on that. And let's do market update while we take a break and talk about it. Stock futures, little changed. If you're watching or listening to this, if I release this today on Wednesday. But let's jump in, see what we've done for the week, the market itself. I think, again, you're going to see in the past 5 days, 1.75% up. Again, it's been a decent time for the market. I think there's this bullish sentiment. There's a bullish sentiment. There's there's a sentiment that people are going to see potentially deregulation, things of that nature that are going to propel the market forward. And so you're seeing it year to date strong. Last 5 days, last month, strong. No crazy news. There's earnings coming about, but there's nothing, too crazy going on. But you're seeing that movement from the market so far. Yeah, I think, you're seeing that you're probably going to get cuts. You'll probably get a cut by the Fed Reserve in November, or excuse me, in December. You have personal income and consumer spending coming, data coming. So we'll have more data. But again, I think the market's just taking its seeds in the third, fourth quarter, and usually getting strong finish to the year that we're more than likely going to see. So we'll keep our eyes on it and watch things closely. Let's jump into if there's any other big news this week. There's a story that I want to talk about, and it's business related, but it's also related to just pop culture and what's going on. Coffee prices hit a multi-decade high. Supply chain probes drip down to consumers. So, coffee prices, I drink coffee every day, of course. Most people do. I guess these prices are getting higher and they're dripping to consumers. That's one thing that, of course, everyone knows or should know. Economics 101. If the if the supplier of your good or product experiences increased prices, they're not going to just say, "Oh, okay, someone else charged me higher prices to gather this good to sell to the end consumer, and I'm just going to eat those margins, eat those negative margins." No, they're going to pass that on. They're going to raise the price and pass that on to you. You'll still come in more than likely, unless the price gets too high for you to be incentivized to buy it, and then you'll try to find another alternative. So that's economics 101. So we're talking about supply chain, we're talking about increasing prices. Those things are going to occur more than likely, right? So Sony looks to its next hit as PS5 sales power down. So okay, I have the PlayStation 5. It really boomed, and that's that when it came out. Oh no, it came out in 2020. Wow, it was released 2020. That makes sense. I've had it for a while. Okay. It really boomed. A lot of people bought it in 2023, even though it came in 2020. I know I bought it as soon as it was released pretty much. But then 2023 really boomed, 8.2 million consoles sold. Then it's really dropped. But I mean, how much more people can buy it? Like PlayStation 4 had a similar thing here where the people wait and then they buy it maybe around Christmas time. But interesting, Sony's may be building a new handheld PlayStation 5 to take on Nintendo Switch. So they're building a handheld version to take on Nintendo Switch, which has popularity in the handheld version. Listen, I'm just as much as a gamer. Well, actually, I'm not. I'm not that big of a gamer. I'm a casual gamer. But yeah, I just couldn't imagine like wanting to game so bad, like especially when I was younger, I did. But now, like wanting to game so bad that I'd have a handheld version. I think that's more of a teen market. But hey, you never know. People commuting, different things. You never know. That's interesting. But there's another really, really interesting article. I'm not sure if you all saw this, but Drake, the biggest hip hop artist in the world, has sued his own label, Universal Music Group, as well as Spotify. That is big news. If you think about it in comparative terms, even though Taylor Swift is a much bigger star in the music terms, but Drake is up there and is the biggest hip hop star. But he is suing his own label, Universal Music Group, and he's saying that they conspired to artificially inflate Kendrick Lamar's song "Not Like Us" by using bots and paying DJs to play the song, which is illegal. You can buy ads, but you can't pay DJs to play the song. And other tactics. So Drake has filed two petitions. He's filed one, which is saying that they need to gather information because they plan to take legal action against Universal Music Group and Spotify for artificially inflating Kendrick Lamar's song, as well as for allowing Kendrick Lamar to release the song. He filed another petition that said that Universal Music Group, which they're both under Universal Music Group, they allowed him to they allowed Kendrick Lamar to release this Not Like Us song, which had damaging things in him about his reputation. So if you remember this is a big rap beef for those that are hip to the culture and or not. But it was a big rap beef over the summer. And what happened through that, and many people think Kendrick Lamar won, but now there's bigger implications because if you're suing your own record label, the biggest record label, one of the biggest record labels in the world, there's only three that dominate the market really. And they gave him a $400 million deal prior to this, and he's negotiating for a $600 million deal. And he believes that his own record label conspired to make him lose this battle so that they didn't have to pay him 600 million. Right. So let's read more into this. So UMG, Universal Music Group, allegedly charged Spotify licensing rates 30% lower than usual rates for Kendrick Lamar's song Not Like Us in exchange for Spotify recommending the song to users who are searching for other unrelated songs. And the petition also said that he claimed UMG launched a campaign to manipulate and saturate the streaming services and airways with the song Not Like Us in order to make that song go viral. Drake initiated legal action by his company Frozen Moments LLC. A petition is typically a precursor to a lawsuit and seeking the preservation of evidence in New York. Most of the claims in suit are aimed at Universal Music Group, a Dutch American owned company, and has no relation to NBC Universal, the parent company of NBC News. So that's interesting. They said there's deceptive practices. He alleged that a UMG employee made payments to an independent radio promoter who then transferred those payments to radio stations or radio station employees to play Not Like Us without disclosing that they were paid to do so. UMG often boasted of the wild success of Not Like Us, which broke Spotify records. Interesting. So they're pretty much saying, he's saying, hey, you guys really colluded, and he has charged. He's going to file on the RICO Act and colluded against him, right? Like, so he said the filing alleged that UMG violated the racketeering influence and corrupt organizations, the RICO Act, and engaged in deceptive business practices and false advertising. So most people are like, okay, what does this mean to I think this is huge because has huge implications about what's going on in the music industry, what's going on with your streaming platforms, what's going on with all of these things, right? Because if it comes out that they would never admit to doing so, but they do this for all artists, right? Like all the big artists have bots, inflated numbers, all these different things to increase the perception of their being hot artists, right? And so this in particular is going to be huge because discovery will happen, all these different things that will break this industry wide open, and people really get an understanding of what's going on underneath the surface when it comes to music, when it comes to business, when it comes to making money in a business that's really, really incredibly competitive, but also tightly wound with major players having a tight hold on most of the market share, right? And so Drake being an artist is still dependent on, a Universal Music Group to give him these large deals to make music. But we're gonna hear more about this. This is a big news, and I thought it needed to be addressed here because of course we're talking business, we're talking news, we're talking everything. So let's jump into something that we love, which is personal finance questions of the week. Personal finance questions of the week. I had a couple good ones. And let's jump right into it. So the first one is, what's the average cost of a Thanksgiving dinner for 10? What is the average cost of a Thanksgiving dinner for 10? Average cost thing to do 10. I mean, good. That's a good question. I mean, like, average cost, we're taking the highs and lows. On the high end, it could be pretty high. On the low end, it could be pretty low, depending on what you eat, what you do. I think it's going to be roughly a few $100. Um, oh, wait. So this is average cost. It's $58 down 5% from last year. Okay. So I don't know what they mean by average cost. Could get by a turkey ham. Like, I think they just mean like the bare bones, right? Um, so average cost has gone down, they said 5% from last year. And that's a function of inflation, function of supply chain, function of availability of goods. And now we're seeing that it's down a little bit. So that's not bad. Okay. I missed it by a lot, but okay. What percent of Black Friday shoppers, is this the same thing? What percent of Gen Z holiday shoppers plan to shop during Thanksgiving week? I'm sure a lot. Percent of Gen Z holiday shoppers plan to shop during Thanksgiving week. I'm sure a lot. Gen Z, so let's see. Do they care about Black Friday, Gen Z? I don't know if they know or care about as much as boomers and millennials. So I'm going to say 20%. Oh, wow. 79%. It's 68% for all age brackets. So 79%. I guess they're always shopping. So I guess they're a tick up during Thanksgiving holidays. Man, I'm way off today. I'm way off with my guesses. So that's 79% versus the 20% that I guess. And it's 68% for all age brackets. So everyone's gonna be shopping this week. Everyone is. Well, folks, we thank you for tuning in. We have of course, a busy week with Thanksgiving. Happy Thanksgiving. We're doing some exciting things on this end. We make sure you stay tuned and tapped into us. We do this every week, and we will talk to you next week.